Hello, Namaskar, and good evening to everyone. A very, very happy new year to all of you. I welcome each one of you who has joined in for this 3-day product marathon journey. I am sure you are going to benefit a lot from this and you will enjoy this journey. Do you know what is the difference between a successful and an unsuccessful person? It is the added knowledge or skills which he acquires and the attitude of learning which he has and he displays, which makes all the difference, which makes him mega successful. Do you know if there are 4 people who are walking in the same direction at the same speed, they are bound to reach their destination at the same time. So what do? Either they need to change course or walk faster to reach their destination. And to empower you with all the skills and knowledge, we are here as a panel and we will ensure that this product marathon journey takes care of every single aspect which is needed for this. So for example, if it is products, we are going to have a very, very magnificent bouquet of products, a 10 product journey, which we'll have over a period of these 3 days. And also the DG Quick, the process which ensures that the ease of onboarding is there on your fingertips all the time. Now to introduce my team members, the faculty for today, let me bring on the screen Mr. Rauf Chogle. Can we have Mr. Rauf Chogle on the screen? Miss Sandhya Shetty and Mr. Vivek Manglik there. Yeah, how are you, gentlemen and lady? I'm sure you are fully energized to take this session forward.
Absolutely. Absolutely, sir.
Great. Good to hear. I'm sure the audience is going to enjoy this more than us. Okay. So without taking too much of time, let me hand over the mic to Mr. Rauf Chogle to take the session forward. Okay. Mr. Rauf Chogle, a veteran and a very strong trainer who takes care of all our skills and knowledge requirements over here in head office. These 3 stalwarts are hallmark for us as a company, and they ensure that the kind of knowledge and learning which is required is delivered to you at all the time. Over to you, Rauf, to take the session forward.
Thank you so much, sir. Really appreciated the warm welcome you've given all of us. So very happy to be here and very excited to be part of Product Marathon. And before that, I would like to welcome everyone with a namaskar, assalamu alaikum, sri akal, and good afternoon. Welcome to Product Marathon. My name is Rauf Chogle, and I'm a part of the sales training team here at the head office. It's a pleasure being here today, honestly, being part of Product Marathon, especially because we have people from all over the country with us today. So not only our sales team members from the field, we have our back office and operations team members from field. So I would like to welcome them to Product Marathon, and a special welcome, obviously, to all the members from the head office. Special because I'm based out of the head office and I know most of them. Right? So a warm welcome to Product Marathon, and I'm sure some of you must be curious about Product Marathon. कि क्या है ये? ये सेल्स ट्रेनिंग टीम वाले क्या रहे हैं? इस बार भगाने का तो प्लान नहीं है इन लोगों का हम लोग को वर्चुअल मोड पे। बिल्कुल नहीं, बेसिकली प्रोडक्ट मैराथन जैसे सर ने बताया एक 3 सेशन प्रोग्राम है, right, where we'll be covering basically some of the products which we carry. So 10 products हम लोग cover करने वाले हैं इन 3 सेशन में, and we will look at the products in detail थोड़ा सा. What are the details of the plans? How do they work? Eligibility criteria क्या है इन plan की? And most importantly, what are the benefits of these plans? What benefits do customers get when they buy these plans from us? Right? And not only that, we are here with certain objectives also. Basically, this is a very important quarter for us. Hamara Q4 start ho chuka hai. So primarily for the sales team members, this will be a good opportunity. This will be a refresher for them on all the new on the products, right? And the non-sales members, operations wale, back office wale, basically we want all of us to understand life insurance, to understand how these plans work, right? So with that objective, we've got together, and as Amitabh sir said, it's going to be a 3-session program. So today, some of the products which will be. So let's start with the portfolio we have. So if you've been with SUD Life, if you've been in the system, this is our product portfolio. Right, and if you look at the products, actually we have segmented these products. So right from protection plans, which are basically term plans, to retirement plans, to saving plans. We also have wealth plans, which are kind of market linked, we can say. We have child plans, and very recently we've come out with health plans. And of course, under group plans, we have the credit life plans. Right now, one of the misconceptions about life insurance industry, and this applies to me also. Before I came into the life insurance industry, I used to think that life insurance only means term plan. So if I buy a life insurance policy and God forbid something happens to me, my family gets a certain lump sum amount. That is what I used to think. And people are reading now, people know about life insurance, but even today, a lot of people think that life insurance means only protection plan, and which is absolutely not true. There are plans available which not only give you life protection, but they can also be used as a wealth creation tool. So just like any other investment, like your fixed deposits, like your mutual funds, like your bonds, etc., there are life insurance plans available which will help you to grow your wealth, along with the benefit of death benefit, basically life protection, and a very, very big advantage which all life insurance plans have is the income tax benefit. Right? So that's our portfolio. If you look at the products, we are looking at about 26 products as of today, which we carry in our portfolio. And as I said earlier, ranging from protection plans to retirement, to savings, to wealth, child plans, healthcare, and of course the loan insurance. And not to mention, all the products we carry are best in class. These are very, very useful plans. These are plans which come with a lot of benefits to our customers, and we will see some of these plans in detail. And the list, the highlighted products you see from each and every category, we have picked up some products which we'll be covering in the next 3 days. Right? So with that, I'll go ahead and start with our first product. So if you're looking at the screen, the first product is called POS SUD Life Sanchay. And if you are well versed with Hindi, if you search for Sanchay, what actually it means is basically sametna, या जिसे saving हम लोग कहते हैं. So Sanchay basically means saving. And if you look at the plan in detail, it is a very, very attractive saving plan. Right? It is a very, very basic entry level plan. Starts with a very basic premium, but it gives very attractive returns, right? और हमारी हिंदी की भाषा में या बम्बईया भाषा में हम लोग इसको बोलते हैं कि छोटा बम और बड़ा धमाका. So it is that kind of a product. So let's look at Sanchay a little bit in detail. तो सबसे पहले let's just understand what is POS. It is a POS plan. So in insurance language, basically POS stands for point of sale. What it means is this plan can be in a way bought just over the counter. Just like any other product we buy over the counter, you can purchase this plan online, and without any medical test, without any formalities, the policy bond is issued to the customer. Okay. Now, because it's a POS plan, it comes with certain conditions, in the sense that there is a limit on the entry age. There is a maximum entry age limit. And there is a limit on the maximum premium also, because we do not do any medical. There is no checks which happen before issuing the policy, right? And one other condition is there is a small waiting period for risk commencement also. Okay, so let's start with the eligibility criteria. So the minimum entry age for this is 18 years. And the maximum entry age is 45 years. So as I said, because it's a POS plan, we do not conduct any medical tests for the policy holders. The maximum entry age is capped at 45 years. So anywhere between 18 and 45, an individual can buy this particular policy. All right, let's look at the plan details. It comes with a policy term of 10 years and a premium payment term of 10 years. So for people who are not in insurance sales, basically are back office and operations participants here, the policy term means that the policy, the life cover, or the length of the policy, or the duration of the policy is 10 years. And premium payment term is for the number of years, how long the individual has to pay the premium. So he pays premium for 10 years and he gets the policy also for 10 years, and his life cover is also for 10 years. The minimum premium, as I said, it is a very basic entry level plan. The minimum premium is only 6,000 rupees annually. Right? So if you divide it by 12, it works out about 500 rupees a month. Very, very basic. Anyone can invest in this plan. And if you look at the benefits, I'm sure some of the participants who do not have a life insurance policy or who do not have, who have not yet invested in a Sanchay will definitely buy one. All right. So it starts at 6,000 rupees only per year. And the maximum capping, because it's a POS plan, because no medical checks, there is a maximum capping of 1,50,000 per annum. That's a maximum premium one can pay in a year. Okay. And the modes available for payment are either monthly, quarterly, half yearly, and yearly. All right. So this is what a policyholder does. So when we go out to our customers, to our prospective customers, and we tell them, okay, sir, this is a plan. It's a POS plan. It's called Sanchay, and this is how it works. You have to pay the premium for 10 years. The minimum premium is 6,000 rupees. The maximum premium is 1,50,000 rupees. Obvious question is, what do I get? Right. So what are the benefits of the plan? What does a customer get when he invests in this plan? So basically, he gets something called as a maturity benefit. It is an endowment plan. So we give him a maturity benefit, which comes at the end of the policy term. So after 10 years, what he gets is 160% of the total annualized premium. Right? And we'll look at an illustration in the next few slides where we'll understand how it works and how much money he gets. So if one invests, let's say 1 lakh rupees every year for 10 years, how much does he get? So we'll look at that. But the total maturity benefit is 160% of the total annualized premium, and it is paid to the policy holder in 10 equal installments from the 11th year to the 20th year. So basically, he pays 10 premiums every year for 10 years. And from the 11th year till to the 20th year, he gets an annual payout, a guaranteed annual payout. Right? And because it's a life insurance policy, it also comes with life cover for the life assured. And how much is that one equal to? Even the death benefit is equal to 160% of the total annualized premium. So the same amount, basically the maturity amount and the death benefit amount is same. And the death benefit is also paid in 10 equal installments to the nominee. So in case, God forbid, in case the policyholder dies during the policy term of 10 years, the death benefit of 160% of the total annualized premium is paid to the nominee and 10 equal installments. Okay? And when we look at the illustration, it will become a little more clear how the plan works and how it looks. Okay, but let's look at some of the important points because it's a POS plan. So as I said, it's a POS, a point of sale plan. There is a waiting period of 90 days. What it means is when the individual applies for the policy, we issue the policy to him, but the risk commencement, the risk to his life, the life cover basically starts after 90 days. Why do we do it? Is because we've not done any medical tests. And this is basically to avoid any frauds. Okay, so there is a 90-day waiting period after which his life cover starts. Okay, so now the question comes is, okay, what if a policyholder buys a POS Sanchay and he dies during the waiting period? Okay, so there are two conditions here. Okay, in case of death of the policyholder during the waiting period or the first 90 days, there are two possibilities. One, he dies due to an accident, okay, which is completely unnatural. He meets with an accident and he dies. In that case, the nominee is given the entire death benefit, which is 160% of the total annualized premium. But in case he dies due to natural causes or not due to an accident, what happens is, because there is a possibility it could be a fraud, he has not completed the 90-day waiting period, we return the entire premium to the nominee. That is how the death benefit works during the first 90 days. But after the first 90 days, from the 91st day, in case the policyholder dies for whatever reasons, the entire death benefit is given to the nominee. All right. So these are some of the important eligibility criteria, the plan details and the benefits. Now let's quickly look at the illustration, how the plan works. It will give you a better representation of Sanchay. All right. So let's take a classic case. We have a policyholder, Mr. Samir, who's 35 years old. He has decided to invest 1 lakh rupees every year in POS SUD Life Sanchay. So the policy term, the premium payment term is 10 years. So what he does is, for the first 10 years, he invests 1 lakh rupees every year. Totally, he has paid about 10 lakh rupees in 10 years, right? So as per the policy, we've already seen the death benefit is 160% of the total annualized premium, or 160% of the annualized premium, because the term is for 10 years. All right. So he paid 1 lakh rupees for 10 years. From the 11th year, he starts getting a guaranteed return of 1,60,000 every year. And this continues for 10 years. All right. And not to mention, because it's a life insurance policy, there is income tax benefit also. So all the returns he gets, the 160% of the annual plan, very, very easy plan. The policyholder invests a particular premium every year for 10 years, and he starts getting 160% of the annualized premium for the from the 11th year to the 20th year. Right. And at the end of the 20th year, after the last payout, the policy closes. Right. Now let's look at the death benefit. Okay, God forbid, Mr. Samir invested, in a POS SUD life Sanchay for a certain number of years, and for some reason he passed away. He died. So let's look at a scenario where Mr. Samir took the policy, and he paid 7 premiums. He paid about 7 lakh rupees, and at the beginning of the 7th year, due to some reason, Mr. Samir passed away. All right. So immediately, because the death benefit is also 160% of the total annualized premium, his nominee starts getting 1,60,000 every year for the next 10 years. Okay. So what Mr. Samir has done, Mr. Samir could have invested this money in some other investment also, and definitely he would have got some kind of returns in that investment as well. But here what he did, he not only got returns on his investment, but he also gets some kind of a life cover. And that is the beauty of life insurance. So it not only gives you return on your investment, it also gives financial protection to your family. All right. And in case of death of the policyholder during the waiting period, we've already seen this. In case Mr. Samir happens to die in the first 90 days, the same thing applies. So if it is due to an accident, the death benefit is paid to the nominee. But if his death is not due to an accident, due to natural causes, the premium is returned to his nominee. All right. So this is how the death benefit works. And let's quickly look at one more possibility where Mr. Samir has invested, he paid the entire premium, and he took certain number of returns, the payouts, basically for about 6 years. All right. And in the 17th year, Mr. Samir passed away. But because it's a 10-year policy, the life cover is only valid for the first 10 years. He started getting the payouts, and he had balance 6 payouts left. He had taken 6 payouts, 4 payouts were pending or left. His nominee is given those 4 payouts, and the policy closes. Right. So basically, in case of death of the policyholder, after the maturity or during the payout period, the balance payouts are given to the nominee and policy is closed. All right. So that is POS SUD Life Sanchay. Some other important points about SUD Life Sanchay is basically, first of all, it's a POS plan. So there is no medical tests conducted on the policyholder. The issuance is immediate. The policy is issued immediately, like an over-the-counter product. The benefits are tax-free. So the policyholder pays 10 premiums in 10 years, and he gets 10 guaranteed tax-free payouts from the 11th to the 20th year. And this policy, POS SUD Life Sanchay, has the option of loan also. So when a policyholder takes this policy, he invests or he pays premium for a certain number of years. And for some reason, after a certain number of years, once the policy has attained a surrender value, he is, let's say, in need of some money. He can take a loan against this policy. And as per IRDAI policies, as per the company rules, we pay up to 70% of the surrender value as policy loan. Right? So that was POS SUD Life Sanchay, a very, very basic plan from SUD Life. And as I said in the beginning, it is an entry-level plan with a premium of as low as 6,000 rupees per year, returns of 160% of the total annualized premium, the maturity benefit. But it is one of the highest selling plans for SUD Life. We sell a lot of these policies. It's a very, very popular plan when it comes to the rural market. It sells a lot. We sell a lot of these policies there. Right. So that was all on Sanchay I wanted to cover. The sales team is very well versed with this product. We sell a lot of these policies, but the idea of doing this product for our non-sales or the operations and back office and our SO team was to make them aware of this plan. This is what we carry. All right. So moving from a chota bum and bada dhamaka, let's move to another product, which is a slightly bada bum with a bada dhamaka. And the name of the product is SUD Life Century Royale. All right, fairly new for us. It's if I'm not wrong, about 2.5 years ago, I think in October 2021, we launched this plan, and it is one of the highest selling plans for us. It is a slightly high value ticket size plan, but the benefits are immense. Okay, so let's look at SUD Life Century Royale a little bit in detail. So let's start with the eligibility criteria and the benefits. So SUD Life Sanchay had only one option in terms of the policy term and the premium payment term. The individual had no choice. He had to pay premium for 10 years. The policy was also for 10 years. But in Century Royale, we give the customers or our policyholders the option of choosing a premium payment term. So either they can choose a 7-year premium payment term where they pay premium for the first 7 years, or if they're comfortable in paying the premium for 12 years, they can do so too. All right, so they have an option there. They want to pay premium for 7 years, or they want to pay premium for 12 years. Right? Let's look at the eligibility criteria. Now, this slightly varies. If you remember, Sanchay, the maximum capping on the entry age was 45 years. Right? Here, the capping is moved. That 45 years capping does not exist. So in the 7-year PPT, the minimum entry age is 18 years. So is in the 12-year PPT. But the maximum entry age in the 7-year premium payment term is 55 years. Whereas in the 12-year premium payment term is 50 years. Okay, so that's kind of increased in terms of the maximum entry age. And if you pay attention to the maximum maturity age, it is 95 years, which is very, very high. In fact, if you look at the other products available from a lot of other insurance company, 95 years is a very, very a number age which is not available on most other products. Okay, which means is basically you can go for a maximum of up to 45 years of policy term, which is again a very, very big number. Okay, so that's on the eligibility criteria. Let's look at some of the plan details in terms of what is the minimum premium, what is the policy term, and what are the modes of premium available. So let's start with the minimum annual premium. The minimum annual premium in the 7-year premium payment term option is 1 lakh rupees. So if you remember, the minimum premium in Sanchay was only 6,000 rupees. But here, the minimum premium in the 7-year premium payment option is 1 lakh rupees, whereas in the 12-year premium payment term option is 60,000. Right? In terms of the policy term, if you remember, Sanchay had only one option. It was only for 10 years. But in Century Royale, we give the customer a few choices. So in the 7-year premium payment term, he has the option of choosing a policy term of 25 years or 30 years or 35 years or 40 years. He has got 4 options. And similarly, in a 12-year premium payment term, he can choose a policy term of 30, 35, 40, and 45 years. Again, he has 4 choices there. So as a policy holder, at the time of buying a Century Royale policy, he takes a decision whether he wants to invest for 7 years and take a policy term of 25, 30, 35, or 40, or he goes for a 12-year premium payment term and takes a policy term of 30, 35, 40, or 45 years. Right? And we also give our customers the option of paying the premium either yearly or monthly in both the options. So, for example, a customer can decide a 7-year premium payment term with a policy term of 30 years and a premium of 1 lakh, which he decides to pay annually once a year or monthly. So basically, we divide it by 12 and he pays monthly. That option is also possible. So various permutations and combinations available for the customers to choose from. Right? So again, now we've seen the eligibility criteria, we've seen the plan details. Now the question comes is, what does the customer get? What do you get when you invest in a Century Royale? Right? So as I said, it is a big bomb with a big dhamaka. So first of all, it comes with 3 benefits. So Sanchay, if you remember, it had maturity benefit and it had death benefit, being a life insurance plan. But here, Century Royale has survival benefit also, along with maturity and death benefit. So let us understand what is survival benefit in Century Royale. So let's start with the 7-year premium payment term. So what happens is, if a policyholder invests in a 7-year premium payment term, he pays premium for the first 7 years. From the end of the 10th policy year, he starts getting a guaranteed payout. All right, we'll look at the numbers a little later. But basically, from the 10th year, he starts getting an annual payout, which continues till the end of the policy term. So for example, if he's taken a policy of, let's say, 30 years, He pays premium for the first 7 years. From the 10th year, he starts getting an annual payout, which continues till the end of the policy term, which means that he gets about 21 annual payouts in that policy. Right? Whereas in a 12-year premium payment term, there is again a 3-year waiting period, and he starts getting an annual payout from the 15th policy year. Right? So you pay for 7 years, you start getting a guaranteed payout from the 10th year in 7 PPT. You pay for 12 years, and you start getting a payout from the 15th year of the policy term. All right. So very, very big advantage for customers who are looking for a second income, after a certain period of time. So this is a beautiful plan, which works well for people who are looking for a second income. All right. Not only that, let's look at the maturity benefit. So the policy continues, our policyholder keeps getting his payouts every year from the 10th year. And at the end of the policy term, so if he's taken a policy of, let's say, 30 years, at the end of the 30th year, he gets a maturity benefit, a lump sum amount, which is equal to 8 times the annualized premium. So for example, if he's taken a policy with a premium of 1 lakh rupees every year, he gets 8 lakh rupees at the end of the policy term. Okay. Now let's look at the benefit, the maturity benefit in the 12-year PPT. The maturity benefit in 12-year PPT is almost double of the 7-year PPT. So instead of 8 times, he gets about 15 times the annualized premium, which is huge. Okay. Now let's look at the death benefit. We'll see these details in the illustration also, but let's look at the death benefit. In the 7-year premium payment term, the death benefit is 10 times the annualized premium. So if he's invested in a 7-year premium payment term with a premium of 1 lakh rupees, in case of death of the policyholder, the nominee is paid 10 lakh rupees, 10 times of 1 lakh rupees. All right. However, in case of the 12-year PPT, it is slightly more. All right. So starts with 10 times of the annualized premium when he starts the policy or when the policy starts. Right. But during the 12-year premium payment term, it increases at a certain rate. All right. And in the first 12 years, it increases from 10 to 15 times. And from the 10th year, once he's done with all the premium payments, it stays at 15 and continues at 15 times the annualized premium till the end of the policy term. Okay. So that is how basically a Century Royale works in terms of the eligibility criteria. What are the terms and conditions? How does the plan work in terms of the premium, the number of policy term available for the customers, and the benefits, right? So if you look at the benefits, it definitely stands out. So for people who are looking for a plan which can give them a guaranteed payout after a certain number of years, which can give them a guaranteed payout at the end of the policy term, and a plan which can give them some kind of a protection in case something happens to them, Century Royale definitely stands out. Okay, and it works. And one of the pitch we use, or one of the things we like to tell our customers, I'm sure a lot of the salespeople present on this in the session will have seen this. So when we talk to our customers, we ask them, okay, when you got married, do you remember that you had made certain number of promises? Basically, you had made 7 promises to your wife. Do you remember those promises? And one of the promise was that you will take care, you will not let her, I will not let you down in any circumstances. So basically, I will take care of you no matter what. And, Century Royale is a plan which can stand this particular promise. It is a plan which you invest in. So if everything goes well, if the policy holder survives through the policy, he gets all the benefits in terms of the survival, the maturity, and the maturity benefit. But God forbid, if something happens to the policy holder, the death benefit takes care of his family also. Basically, his wife or his partner, if he has made that promise of taking care of her, this particular plan can do that too. Okay, so let's look at an illustration quickly, just to understand the plan. It will give a better picture how Century Royale works. So let's take a scenario where we have So we have an example where we've taken the policyholder to be a 40-year-old male. The numbers change basically. The reason of specifying the age of the policyholder is the younger the policyholder is, the returns are better. the older, obviously the returns are a little lower. But let's take a case where there is a 40-year-old male who has decided to invest in a Century Royal. So he takes the 7-year option and he's investing 1 lakh rupees every year for 7 years. All right. So the first 7 years he invests 1 lakh rupees. And as per the plan, from the 10th year, he starts getting a guaranteed payout, which continues till the end of the policy term. All right. So if you remember, he has paid 1 lakh rupees every year. So he has paid about 7 lakh rupees, 1 lakh every year. And if you look at the number, if the numbers are clear on your screen, you will see that he starts getting almost 50,000 rupees, 50% of the annual premium every year. Right. And in this case, he gets it for about 31 years. So 50,000 rupees guaranteed tax-free returns for 31 years. All right. Not only that, because Century Royal also has a death benefit. At the end of the policy term, the policy holder gets a maturity benefit of 8 lakh rupees, which is 8 times the annualized premium, and the policy closes. All right. And if we add this all up, if you look at the total number, we are looking at an investment of 7 lakh rupees. He invested about 7 lakh rupees in 7 years, and totally he got a benefit of 23.37 lakh rupees. Okay, so that's the beauty, that's the power of Century Royal. All right, and that's not it, honestly. If you think that these are great returns, this is a wonderful plan, look at the 12-year option. All right, so we convince the policy holder to look at the 12-year option, where we said, sir, instead of 7 years, why don't you invest for 5 more years and see the returns? All right, so the policy holders agrees and he says, okay, instead of 7 years, let's invest for 12 years. And he starts investing 1 lakh rupees for 12 years. So he's invested about 12 lakh rupees in the first 12 years. And as per the plan, from the 15th year, he starts getting a guaranteed guaranteed survival benefit. But look at the number. It is almost equal to the premium he had paid. So he invested about 1 lakh rupees for 12 years. And from the 15th year, he starts getting 1 lakh rupees as an annual payout, which is guaranteed and income tax free. Okay. So basically your survival benefit, the policyholder's survival benefits have doubled in the 12-year plan. He just paid 5 premiums more. He just paid 1 lakh rupees more, but the returns have doubled for him. All right. So if he had paid, if he had taken the 7-year premium payment term, he would have got, let's say, 50,000 rupees. Here he has paid for 12 years, 1 lakh rupees for 12 years, and he's getting a payout of almost 1 lakh rupees. Okay. And not only that, look at the maturity benefit also. The maturity benefit has also almost doubled. So in the 7-year premium payment term, he would have got 8 lakh rupees. Here he is getting 15 lakh rupees, which is almost double of his annual premium. Right? And if you add it all up, he invested about 12 lakh rupees in 12 years, and look at the maturity benefit, or look at the total benefit he got. He got more than 40 lakh rupees in 26 years. Right? And this is what we tell our customers. Okay, invest for 5 more years and double your returns. And customers, do listen to our story, do agree with our pitch, and they go for the 12-year option most of the times. All right. So I'm sure the plan, I find this plan very, very attractive. It's one of my favorite plans in the SUD Life portfolio. So, look at Century Royal as a very beautiful plan. All right. So that's it in terms of the how the 7-year premium payment term and the 12-year premium payment term works. Let's quickly look at the death benefit. All right, we've already spoken about it, but the 7-year premium payment term, the death benefit is 10 times the annualized premium, which starts from day 1 of the policy bond, right, the day the policy commences, and it continues till the end of the policy term. So in case the policy holder dies during the policy term, anytime during the policy term, during the premium payment term, during the payout term, 10 times the annualized premium, the death benefit is paid to the policy holder, to the nominee of the policy holder, sorry. Right? Whereas in a 12-year premium payment term, it starts with 10 times the annualized premium, right, at the start of the policy term. And during the premium payment term, it keeps increasing by a certain percentage, 0.4 approximately. And from 10, it increases to 15 in the first 12 years. And from the 15th year, it stays at 15 times the annualized premium. All right. And same thing in case of death of the policyholder during the premium payment term or the payout term, If something happens to the policyholder, the nominee is given the death benefit and the policy closes. Okay. So some very, very important points about Century Royale is, first of all, one of the points which I would like to highlight is the 45-year policy term, not available in a lot of products in the market. All right, 45 is a very big number when it comes to the policy term. So that is available, and we give 3 tax-free benefits. All right, so there is survival benefit, which starts after a certain period of time during the policy term. The maturity benefits, which the policyholder gets at the end of the policy term, and of course the death benefit, because it's a life insurance policy. In case anything happens to the policyholder during the policy term, the nominee is given the death benefit. And all these returns, right? So, this is one very unique thing about life insurance policies is there is income tax benefits. So these are guaranteed returns. If we tell the policyholders that you would get a return of, let's say, 15 lakh rupees at the end of the policy term, it is guaranteed. Not only that, it is income tax free. All right. And again, Century Royale comes with the option of policy loan. So in case the policyholder needs to take a policy loan against his policy, he can do so too. All right. So that was our Bada Bum with Bada Dhamaka, the Century Royale. And, that brings us to the end of my run on this product marathon. Thank you very much for your time. Thank you very much for your attention on going through Sanchay and Century Royale. And I would like to invite our second trainer, Ms. Sandhya Shetty, on screen to take over and take this ahead from here. Thank you very much and have a wonderful evening, everyone.
Thank you, Rauf. And good evening, ladies and gentlemen. My name is Sandhya Shetty, and I am representing sales training team from the head office. I'll be taking you through the guaranteed saving plans which are left for the day, which is Century Plus and Century Star. The key USPs of this plan is in the assurance it is providing about the guaranteed returns. This guaranteed returns in this plan actually gives a peace of mind to our customers in an economic turbulence period. So there is a guarantee lying in this plan. Moreover, there are a lot of flexibilities in this plan. If we say flexible policy term, the policy holder has the choice that he can choose the policy term according to his financial goals. And the best part about these plans, which I'm going to take you through in this few time now, is the fixed limited premium payment period. This fixed premium payment period can suit to any of the customers for their diverse needs and goals. Whether you want this plan to create wealth, whether you want this plan for an education funding of your children, whether you want to create a guaranteed corpus for your retirement, this plan is the best plan we can offer you. Additionally, they also provide you with the tax benefits and loans. As Raufji has already taken us through some plans which provide loans, these plans too have the loans facilities. And you can enhance the attractiveness of these plans by adding a rider with just paying a nominal premium. So these riders can also enhance the beauty of this plan. Now, the whole purpose of this product training is the people, the audience who are present here, first they know our product, they become confident about our product, and then they can conveniently convey the value of these products to our customers. So let us explore this distinctive features of this plan in the session ahead. So this is the first plan which I am taking you through, which is an individual plan and a non-linked plan. So you don't have to worry about the market. So it is not linked to the market. Second thing, it is a non-participating saving life insurance. That means it is nothing to do with the profit and loss of the company. So it is a guaranteed saving insurance. I hope my screen is visible.
You need to share again.
Yeah. Yeah. So you can see the eligibility criteria in this plan. The minimum age of entry in this plan is 8 years. So you can take this plan for your child. The proposer can be the parent, grandparent, or the legal guardian. The maximum age of entry you can see in 50 years. I hope my screen is visible. Can somebody confirm?
Yes.
Okay. So, sorry for the technical glitch we faced with the Century Plus eligibility criteria. As we were seeing that the minimum entry age is years and the maximum is 50 years. I am heard. So I'll just take you once again to the Century Plus. It's an individual, non-linked, non-participating saving life insurance plan, and we will be taking you through the eligibility criteria and the benefits of this guaranteed saving plan. You can see the minimum entry age in this plan is 8 years. So you can take this plan on your child's name, on your child who is 8 years, and the parent, the grandparent, or the legal guardian can be the proposer in this plan. The maximum entry age in this plan is 50 years, and it has a flexible policy term which you can choose between 10 years to 16 years. The best USP about this product is the premium payment term, which is limited to 5 years. That means the policyholder will not have any liability of paying the premium for longer term. Just imagine a 50 years old person wants to retire by 60. So he can choose a policy term of 10 years and he has to pay only 5 years till he is working. That means till 55 years he has to pay the premium. Then his liability of paying the premium is over. And by the age he is 60, he can build a guaranteed corpus for his retirement. So this is the wonderful USP of this plan, which is limited premium payment term. The next you can see is the minimum annual premium. The minimum annual premium is 1 lakh, and the maximum annual premium you can pay in Century Plus is 2 crores. And the sum assured you get in this plan is 10 times of the annual premium. So the minimum sum assured in this plan is 10 lakh rupees, and the maximum is 20 crores, subjected to the board approval. Now, the premium payment mode, when we are talking about in this plan, no deviation. You only have to pay through annual mode, which is yearly. There is no other mode available in this plan. And if we talk about the plan benefits which you have, it is a very, very simple plan. You get two benefits in this plan. One, if you survive the entire policy term, you get the maturity benefit. The maturity benefit is guaranteed. So you get a guaranteed lump sum amount when once you end the policy term. The guaranteed maturity benefit is annualized premium into the guaranteed benefit factor, which is based on the policy term and the age at entry. And in case of unfortunate event during the policy term, in case of death, the nominee receives sum assured at death, which is 10 times of the annualized premium. We will just have a look with a small illustration here, wherein we have taken the example of Mr. Samir, who is a 40 years old person, and he has decided to buy this Century Plus plan, wherein he pays an annual premium of 1 lakh rupees for a premium payment term of 5 years, and he has chosen the policy term of 16 years. So you can see Samir is paying 1 lakh rupees annually for 5 years. And at the end of the 16th year, he gets the guaranteed maturity benefit of 9 lakh 60,000. So you can see that he has paid 5 lakh and he gets 9 lakh 60,000 rupees guaranteed. Now this can be used by Mr. Samir for wealth creation, for your child education funding, or a corpus is being created, a guaranteed corpus has been created for a retirement plan. And in case of unfortunate event of death, if it occurs during the policy term of the 16 years, the nominee will receive the sum assured on death, which is 10 times of the annual premium, which is 10 lakh rupees, is paid to the nominee and the policy is terminated. So what are the other benefits of Century Plus? First is the early surrender. In case of financial emergency, you cannot continue with the entire policy term and you have to, you want the urgency of the fund, even if you surrender. After the 11th policy year, the surrender value is equivalent to the maturity benefit. So the policyholder do not have to compromise on the returns. The next beneficial point is how you can enhance this product by adding riders. So we have 2 riders which you can add in this plan. The first being family income benefit rider. Now, family benefit income rider, in case of death of the policyholder, you get the rider sum assured in the form of a monthly income. Now, how you receive this monthly income? This is for a fixed period of 10 years, and you get 10% of the sum assured divided by 12. In monthly form, you will get this rider benefit along with the plans sum assured at that. So you can add this with a small nominal premium. You can add this rider and you can enhance the beauty of this product. The second rider is the accidental death and total permanent disability rider. Now, if you add this rider in this plan, in case of accidental death, you are already getting the death benefit of the plan. But because of this rider, you will also get an 100% rider sum assured from this rider benefit, accidental death, which is the 100% rider sum assured you will be getting. And if it is a case of total permanent disability, you will receive this benefit in 10 equal installment, which is 10% of the rider sum assured you will be getting in this installment. So this is the benefit of riders. This is optional. If you want to add, you can add, but you have to add this at the inception. While you are taking the policy, you need to add this riders. And in case of financial emergency, if you require amount of money, you can always avail loan facility with this plan. You have to only assign this policy, keep this policy as a collateral, and you can avail 70% of your surrender value as loan. So these are some wonderful benefits of Century Plus, which is very simple to understand, very simple to explain it to the customer. You have to pay for a fixed period of 5 years and you can take the benefit at the end of the policy term, which is from 10 years to 16 years. You can choose any of the policy term. So quickly we can go to the next plan, which is Century Star. Now this plan is again a non-linked, non-participating saving life insurance policy. And now again, the customer does not have to think about the fluctuation which will happen in the market, or don't have to think about the profit and loss the company is facing. This plan is also a guaranteed saving life insurance policy. Now let us see the eligibility criteria. This comes in two forms. One is post Century Star and one is the normal Century Star. First, I'll take you through the normal Century Star eligibility criteria and the benefits. You can see here the minimum age of entry is again 8 years, and the maximum entry age in this plan is 55 years. To know more about the plan, here the flexibility in the policy term is between 12 years to 16 years. The policyholder can choose any of the policy term, but the limited premium payment term here is fixed for 7 years. So this is the difference you can see. And a minimum annual premium in a normal Century Star plan starts with 50,000 rupees, and the maximum annual premium is 2 crores. So the sum assured you can get in this plan is 10 times of the annualized premium. So the minimum sum assured becomes 5 lakh rupees and the maximum is 20 crore rupees. The premium payment mode which is available in this plan is yearly mode, and the plan benefit again is very simple plan to explain to the customer. You get two set of benefits in this plan. One is the maturity benefit and one is the death benefit. Now, what is the maturity benefit? If the policy holder who has taken this plan survives the entire policy term, at the end of the policy term, when the policy matures, he gets a guaranteed lump sum amount, which is the annual premium into the guaranteed maturity benefit factor, which is based on the policy term and age at entry. So everything is guaranteed in this plan. In case of unfortunate event, in case of death of the policyholder, the nominee receives the sum assured on death, which is 10 times of the annual premium. So you get a cover for a longer period of time, and you have to pay the premium for a limited set of time. Now let us see an illustration and understand how this works. Here again, we have taken an example of Mr. Samir, who has opted for a normal Century Star plan with an annualized premium of 1 lakh rupees. And he has taken a policy term of 16 years, wherein he has to pay the premium only for 7 years, but he is getting the life protection cover till 16 years of his plan. Now you can see that Samir is paying 1 lakh rupees for 7 years. That means he has paid a total investment of 7 lakh rupees. By the end of the 16th year, if Samir survives the entire policy term, he gets the maturity benefit, which is 12,84,670 rupees. So he pays 7 lakh rupees and he gets 12,84,000 rupees tax free. Okay, so in case of unfortunate event in this entire term, the nominee will receive the sum assured on death, which is 10 times of the annualized premium, which is 10 times of 1 lakh rupees. 10 lakh rupees is paid to the nominee and the policy here expires. So this is the benefit illustration which shows how this plan works. Let us see more benefits of this plan. So Century Star also comes with early surrender benefit. So after 13th year, in case you are surrendering this policy because of any financial emergency, you will not have to compromise on the return. So you will get exactly the returns which is received on the 13th year. The maturity benefit, the surrender value and the maturity benefit is equal. So you will not have to compromise on the returns. The next benefit is you can enhance this plan and the benefits you receive from this plan by adding this rider, which is family income benefit rider and accidental death and total permanent disability rider, by addition of a small nominal premium. And in case of financial emergency, you require some liquidity from this policy, you only have to approach SUD Life, and you can avail 70% of the surrender value as the loan. Now, this loan facility is only applicable after 2 years when the policy has achieved the surrender value, and you can avail these loan facilities for the emergencies. Now, let us look at the post Century Star. The POS, as my colleague Rolf had already explained you, the full form, that is point of sales over the counter product, which is hassle free. So there is no medical in this plan. It is a very easy going plan. You take the plan and it is immediately issued. But there is some eligibility criteria in this plan. You can see that the minimum age of entry in this plan is 18 years. Actually, it is 18 years. And the maximum entry age is 50 years. It is limited to 50 years. The policy terms remains the same. You have the choice to choose between 12 years to 16 years. And the premium payment term allowed is a fixed premium payment term of 7 years. The minimum annual premium you will be paying in POS Century Star is 50,000 rupees, and the maximum annual premium you can pay is 2,50,000 rupees. That means the minimum sum assured in this plan is 5 lakh rupees, and the maximum sum assured in this plan is 25 lakh rupees. The premium paying mode available in this plan is yearly mode. So this is a very simple plan wherein you get only two kind of benefit, which is maturity benefit and death benefit. In case the policyholder survives the policy, you receive a guaranteed lump sum amount, which is prefixed, which is annualized premium into the guaranteed maturity benefit factor. And in case of death, in this tenure of the policy term, the nominee will receive 10 times of the annualized premium as the death benefit, and the policy will cease. Now, there is some point which you have to keep in mind when it is point of sales product. Because it is a non-medical product, there is a waiting period which is applicable in this plan, and this waiting period is for 90 days for the risk to start. So if anything happens in the duration of this 90 days waiting period, that is, we are talking about the death. So in case of death, during this 90 days waiting period, if this death is due to accident, you will receive the entire death benefit. But if it is not due to accident, it is because of a natural cause, you will receive 100% of the premium you had paid as the death benefit. But after this 90 days waiting period is over, this plan will operate normal, and you will receive the entire death benefit in case of accident or in case of a natural death. So this is some point you need to cater into. Now, here I end my presentation, and I would like to invite our next faculty for the day, who is Mr. Vivek Manglik, who will be taking you through the DigiQuick onboarding process. So, Vivek.
Thank you, Sandhya. Thank you for that wonderful presentation. And guys, a very good evening to all of you. And wishing you once again a very happy new year. After that excellent explanation of various products, the best-selling products that SOD offer to our salespeople and the customer, we now move on to a different path altogether. Say sales is always said to be a journey. It starts from prospecting a customer and finally selling a product to him, then getting the product issued, providing after-sales services to him, and then using that opportunity for cross-sell and upsell. So during that long journey of sales, there is an important pit stop, एक छोटा सा पड़ाव है, where we need to get the case issued. Every single transaction जो हम लोग customer से करते हैं, every single money that we debit as a premium, it is of use only and only when the case get issued. Until unless the case is issued, there is no benefit either to the customer, nor to our company, nor to the sales officer, nor to the bank, anyone. Right? So now we will discuss about a process wherein we will have an idea about how to get the case issued. wherein there is a portal called DigiQuick, which we use for our online inverting of cases. So before we start, just allow me to share my screen, and then we'll have a brief discussion around our DigiQuick process. Hope my screen is visible.
Yes, Vivek.
Okay, thank you, Sandhya. Okay, so before we move to this particular video, this is in a video form, and what I'll do is that at some points where I feel I need to intervene, I'll just pause it and explain that particular aspect to you. But before we move to this video, I just like to highlight few things about our online sales portal, DigiQuick portal. First of all, that this particular portal is not available on Play Store. There is a link shared at frequent intervals to a sales team, which they need to click and install it on their mobiles, right? Second part is that this particular DigiQuick is workable both in offline as well as online mode. The only thing that you need to do is that if you are working on an offline mode, no problem, it will work perfectly fine. But after you have started and you have done your work, you need to sync it once in a day. Once in 24 hours, you need to synchronize it so that the data available on your mobile gets synced with the data on the server of our company. That is the only difference. Otherwise, it works perfectly fine whether it is online or offline. Right? Okay, so now we'll start with our presentation or the video around the DigiQuick process.
Welcome to this module on DigiQuick login process for customer onboarding. These are the steps to be followed. Input customer details, SAF and benefit illustration.
So altogether, there are 12 steps during this complete DigiQuick journey. So we'll learn one by one about every step. And in between, I'll also give you some tips where we need to take care of foreign certain aspects while we are uploading the documents or while we are filling the details. So first, let's see what are the 12 steps that are being used in DigiQuick journey from end-to-end process.
Aadhaar-based digital eKYC for proposer and life assured. Input communication details. Input nominee details. Plan details. Input health and lifestyle details. Input family history and other insurance details. Input bank and NACH details. Input additional details. Input channel details. Upload required documents. Payment details and submission. Let us see these steps in detail.
So these are the 12 various steps of the DigiQuick journey that we need to follow so that the case get issued at the right time. Okay. So now let's see these steps in details.
Let us start the DigiQuick journey of creating new customer. Once you log into DigiQuick application, 3 icons are displayed.
Okay, so once you log in your DigiQuick, this is the home screen that you get to see. Right? There is a family photograph, and then after that, there are 3 icons. The first one is new business, the second is policy tracker, and third is the benefit illustrator. Right? For inverting a fresh case, you need to click on new business. We'll also have a slight discussion around the policy tracker usage, but that will be at the end of the presentation, right? So you need to click to add new business to start the inverting journey of your case.
Click on new business. Select individual product. Select create customer. In this section, fill in the customer details and select the branch code. Click on the...
Okay. So when we moved up till this level, so your branch code will be only those branches which will be mapped to you, because you will have to log in DigiQuick with your own employee ID. Therefore, the branches visible over here will be only those branches, 3-4 branches which are mapped to you. So you need to select the branch in which the transaction is done, or on which the branch is the business is to be mapped, right?
SAF form and fill in the details.
Okay. The very first form that you need to fill is the suitability analysis form, or SAF form in short form. This particular form is an IRDA mandate wherein we are trying to see whether the product offered by my sales officer to the customer is suitable as per his requirement. If it is not suitable, what is the fun of purchasing that particular particular product? So therefore, we use suitability analysis form to check whether the product is perfectly suitable as per the requirements of the customer. What sort of requirements? We'll have to see various parameters in terms of his or her risk profile, in terms of his or her investment objectives, right? In terms of his or her life stage, what kind of product benefit is he or she looking for, whether it is a lump sum benefit or it is a staggered benefit, right? He is looking for a low risk product or a high risk product. So this is a performa wherein we are trying to fit in our product as per the requirement and the suitability of the customer. And finally, we end with naming the product which suits the requirement of the customer.
Next, we need to enter the product details to generate benefit illustration by clicking on Benefit Illustration tab. By clicking on the View Summary, you get the complete details of the product as shown on the screen.
Okay, so this is what our benefit illustration look like, wherein the complete details of the product are shown to the customer. What is the premium he is paying and what are the benefits you are getting.
Clicking on Generate BI, all the details regarding the plan is displayed. Click on Proceed to
This is the detailed BI which will be attached to the policy bond of the customer. BI means benefit illustration, right? So this is a clear-cut illustration where what the customer will be paying, what will be the death benefit, what will be the maturity benefit, what is the guaranteed part, what is the non-guaranteed part, what is the surrender value. Each and every aspect of the product is clearly displayed in this benefit illustration. So this will become a part and parcel of the policy bond that will be received by the customer, right?
go ahead. You will receive a pop-up window for the payment. The system will ask pay now or pay later.
So there will be two pop-ups. One will be asking whether you have allocated the application number or not. You need to click no over there. The system will automatically generate a unique application number and it will be allotted to your case, right? So first thing is that your application number is to be allotted by the system itself. Second, do you want to pay now? Both the options are available, but during the practice, we generally say that we will pay later because in the last step, we are making the payments, right? So do you want to pay now? When this is the pop-up, you have to select pay later. It is not that you cannot select pay now. You can select, but as the 12th step of our DigiQ journey is payment itself, therefore we complete our payment process in the last step itself.
Depending on your situation, click on pay now or pay later. For simulation purpose, we'll select pay later. Next screen, we will need to enter the life assured details.
Aadhaar-based digital eKYC verification for life assured or proposer.
Okay, so this is something important. This is paperless KYC or digital KYC, or short form में हम इसको eKYC बोलते हैं, right? This particular aspect is for making the KYC simpler for the customer and the company. लेकिन ये mandatory नहीं है, because इसके अंदर एक OTP sharing जो है वो involved है. अब some customers may be comfortable sharing an Aadhaar OTP with you. Some customer may not be comfortable sharing Aadhaar-based OTP with you, right? So depending upon the convenience of the customer, we can either use this process or we can skip this process. This process of eKYC helps in generating the complete KYC profile of the customer. We pick that whole data from the database of Aadhaar, address proof, ID proof, photograph, age proof, every single aspect of KYC is picked from the government database, and therefore there is no need of physically giving these documents to us, right? But this will happen only and only when the customer is comfortable sharing the Aadhaar OTP with you. The customer will receive an OTP on his registered mobile number, and he must share that particular OTP with you to take this process ahead. So this process is optional. If the customer is comfortable, very good. If he is not comfortable, we can skip by clicking next, right?
Let's see the process.
Click on the ELA applicant. The consent page opens. Enter the 12-digit Aadhaar number and click on Agree. You will receive the OTP on the registered mobile number. Enter the OTP number. After successful eKYC, there is a blue tick mark on the screen and the page is redirected to the DG Quick page. Post successful eKYC, the following details: age proof, ID proof and address proof will be auto-populated. Next, enter the remaining customer details.
So after eKYC, now we are moving ahead with the other details of the customer, right? So that particular details will be fetched from the customer's database from Aadhaar, and rest the information you need to put in via DigiQuick.
Communication screen will appear. Enter the complete address and the contact number. Next is the
For
nomination.
communication purpose, you need to offer address proof also, right? So if he is offering if you are having a permanent address different from what his mailing address would be, then you need to provide the proof of both the address proofs. But if his mailing address as well as the permanent address is similar, you need to just provide a single address proof. The next screen, that is the fourth step of the 12 steps, is nomination, right? The nomination ensures that in the unfortunate event of the death of the customer, who will be paid the death benefit. So here we need to input the details of the nominee. Maximum 2 nominees are allowed in our system. It can be 1 or it can be 2. So we need to input the percentage of share that the nominee will get if unfortunately the customer dies, right? So if there is 1 nominee, then the percentage of share obviously will be 100% to him or her. But if there are 2 nominees, then the customer need to specify how much share he or she wants to give to his nominees: 40-60%, 70-30%, 20-80%, 50-50%, whichsoever, whatever may be the case, right?
Screen. Here you need to allocate the percentage share to each of the nomination. It can be more than 1. However, we need to ensure the total is 100%. Click on plus sign to add more nominations.
So you need to click on this red button to add nomination. Whether it is a single nominee or whether it is 2 nominees, at both the instances you need to click on this red button so that the details of nominee are saved.
Once this is done, click next. The next screen is the plan details. All the details in this section are prefetched from the illustration.
Okay, so the 5th step is the plan details. As we have already generated the BI, beneficiation, every single detail had already been filled. So all these segments of this screen will be auto-fetched from the BI, except one.
The only input required here is renewal premium remittance.
This one. This is the only step which is missing in this whole screen, which you need to select. ECS, ACH means auto debit of the renewal premium from customer accounts every year. Auto debit. Customer need not manually come and deposit the money in our branch, right? And non-ECS means that the customer is opting for a system where he'll manually give the check or make the payment every year by his own account. What the process SOD follows is that ECS is a mandation. For every single case, ECS is a mandation. If some customers do not wish to use this ECS facility, we need to have a letter from the customer or a mail from the bank, and then we'll have to get an approval from the BCG team. Only then the case can be inverted as a non-ECS case. For a routine case, ECS is a mandate. So in this plan details wala part, you only need to fill this detail. Every single element जो इसके अलावा है, that is auto fetched from the BI.
As shown on the screen. The screen is related to health. Enter the height in centimeter.
Okay, the next segment is health segment. Once important, very, very important, because the medical underwriting or the medicals will be done on the basis of the details provided in this segment. So we need to be very, very careful while inputting the details. We need to ask few questions to the customer before we fill these details. Otherwise, there can be a mismatch between what his health condition is and what we are filling in here. Right? So we need to be very careful by inputting the details in the health segment so that the medical underwriting is perfect. The height should be in centimeters and the weight should be in kgs.
And weight in kilogram and answer all the health related query. Please note there are few questions is related to COVID which needs to answer correctly. After answering the questions, please fill the traveling history or plan, if any. Next is the family history. Enter all
Moving
the
to the 7th step of our journey. This is regarding the family history. The customer family member's history needs to be inputted here. The only thing that is mandated here is that the customer need to provide bare minimum medical family history of his father and mother, whether they are alive or deceased. Minimum father and mother details are to be provided. The process remains same, just like a nomination. नॉमिनेशन में जैसे हम लोगों ने एक ही करके रेड बटन पे क्लिक करके नॉमिनी ऐड किए थे, सिमिलरली हियर आल्सो वी नीड टू इनपुट द डिटेल्स ऑफ वेरियस फैमिली मेंबर्स. कम से कम बेयर मिनिमम father and mother history is required, whether they are alive or they are deceased. Right? For those family members जिनकी हिस्ट्री द कस्टमर इज नॉट विलिंग, इट इज इमैटेरियल. अगर वो देते हैं इट इज मोस्ट वेलकम, नहीं देते हैं नो इश्यूज. बट फॉर फादर एंड मदर उनको देना ही होगा. दिस इज द मिनिमम दैट वी रिक्वायर्ड फॉर मूविंग अहेड फ्रॉम दिस स्टेप ऑनवर्ड्स. राइट? The process remains the same which we used in the nomination part.
Is regarding the family members. Click on the plus to add more family.
Similar red button, just like a nomination wala button. You can keep on adding 3, 4, 5, 6, 7 members depending upon the details provided to you by the customer about his family members.
History. In this screen, you need to enter customer's bank and NACH details for policy.
This is for providing the bank details of the customer wherein he need to get the policy proceeds. Right? So IFSC code of the bank account number, account holder name. This is the simple process which need to be filled in by the SO by taking the details from the customer.
Proceeds and renewal premiums. Next is the additional section. You need fill in the proposal date and the signature type and click on next to proceed.
This is for the CKYC purpose. The account type is always normal and signature will depend upon the kind of signature used by the customer. If he is using the signature in a vernacular language like Urdu, Hindi or Gujarati, then we have to get the vernacular sign. Otherwise, if he is signing the CDA for providing signatures in English, then there is no need of vernacular declarations.
In this section, you need to enter the channel and SP details.
This is something very important. Channel details will ensure the credit which will be given to the concerned specified person, SP. Right? So this channel detail will ensure which SP will get the credit, and on the basis of that credit, the SP may or may not qualify for some kind of campaign. So we need to be very careful by inputting these details. This particular portion of channel details is very important in terms of the credit that will be offered to the SP. Right? So this sales code is the sales code of our own sales officer, because we have logged in using his employee ID. So his own sales code will already be auto-populated, and rest of the things are to be filled by him during the course of action.
In case if the SP name is not displayed in the list, you can also enter the SP code who has sourced the business. On selecting not in the list, a new field input SP code will appear. Enter the valid SP code.
Okay, so there may be a possibility that there is a SP who is sitting in your branch, helping you out, and you want to use his SP code, but that SP code is not visible in the drop-down list provided here. That may be a possibility just because of the mapping issues. So what to be done? There is an option in the drop-down called not in the list. So once you select that option not in the list, then you have an option of manually typing in the SP code of that particular SP whose name is not featuring there. right? So if his or her name is already in the drop down, no issues, just select it and go ahead. But if somehow there is a SP whose name is not featuring in the drop down, so there is always an option called not in the list. You just need to select that not in the list and manually type the SP code. You need to type the SP code correctly, otherwise this will create a rejection of your case. So be very, very careful while selecting the SP code. Okay.
Next is the document upload section.
Okay. One of the most important part is document upload. एक दो चीजें we need to discuss before we move ahead. First, documents that are to be uploaded should be in JPG form. Moreover, the size of each document should be less than 200 KB. Otherwise, your document will not be submitted properly and there will be a rejection. So, document size should be less than 200 KB and it should be in a JPG form. ये दो चीजें आपको याद रखनी है. And you should be ready with all the documents before you start the DGQ journey. Otherwise, what will happen? You are having half the documents with you, half the documents are not available. Then the journey will remain incomplete and you will have to sit once again to do the formalities or to do the remaining work. So it is always advisable and it is always better that you collect all the relevant documents from the customer before starting the journey, so that at one go you can upload all the documents and the process is through and through at one single go. Okay.
Please upload all the documents properly. In case of customer declaration consent, for non-month end, CDF question will be mandatorily through SMS.
Okay, so this is a recent change done in August 2023, that we have moved from a system of physical upload of customer consent form to SMS link OTP based upload. Right? During the month end, there is no possibility of a physical upload of CDF. CDF is the customer declaration format where the customer is giving his or her consent for buying this policy. So that particular physical upload is not available during the month period. It is available only and only during the month end time. So throughout the month, the CDF will be an online submission only through the SMS link OTP based, which we will see in the future slides, right? So CDF throughout the month, online basis, only in month end through physical upload basis. The second part, ACR, Advisor Confidential Report. ये दोनों तरीके से available है. You can do it online via SMS link, just like CDF, or you can get it done through physical upload. The CDF is for the customer to be submitted. ACR is the SP report, Advisor Confidential Report, or the SP report, which need to be submitted by the concerned banker who is our SP. ठीक है, तो दो अलग अलग चीजें हैं which need to be submitted by two different people. The first one CDF from the customer and ACR by the concerned SP.
For month end, CDF question will be physical upload. Advisor confidential report -ACF you need to select if you are uploading physical form or send an SMS. If the documents are uploaded properly, it shows a green tick mark, else it will show cloud-like symbol as shown on screen.
So if your documents are submitted successfully and clearly, it will show a green tick, just like this previous slide, like this. Tick. This is a proof that your document is submitted perfectly, right? But if there is any error, the documents are not clear,
It shows a green tick mark, else it will show cloud-like.
it will show like a cloud. This means that your document is not submitted successfully. You need to click on the trash to remove this and once again re-upload the document which was not properly uploaded. If the documents are not properly uploaded, the journey will somehow take more time. There will be requirement raised. You need to once again submit the document. It is always advisable that you take care of the proper uploading and submission of the document at this particular juncture itself, right? Size is once again an important criteria. Once again, repeating myself that the size of an individual document should not be more than 200 KB. It should be within the limit of 200 KB itself.
Symbol as shown on screen. In the document section, if eKYC services are used for age proof, ID proof, address proof and photograph, both life assured and proposer, then the same shall become non-mandatory for upload.
This is the advantage of eKYC. If we had used the eKYC route, then this address proof, age proof, ID proof, photograph, this must have been fetched from the database itself, from the Aadhaar database, and you need not do the manual upload or the physical upload here. Had we used the eKYC procedure only, then only it will be fetched, right? One more important thing to be remembered, when you are uploading the Aadhaar of the customer, kindly ensure that you mask it. Masking of Aadhaar means out of the 12 digits, the first 8 digits are to be masked and the last 4 digits are to be left. Only the last 4 digits. And should be clearly hidden or masked. Those first 8 digits are to be clearly hidden. Only the last 4 digits are to be shown. That is a mandation, otherwise your case will be rejected. So please make it a point that whenever you upload Aadhaar, properly mask it before uploading it. Okay? For size of this particular document, for any document, if the size is more than 200 KB, there are lot many applications available on the Play Store, free of cost, which will help you reduce the size of that particular document within the 200 KB limit. There are not many applications available. You can use any application. Generally, 400 pixels by 400 pixel size is less than 200 KB, generally. So you can take help of those free applications to reduce the size if the size of the document is more than 200 KB. Okay. The advisable part as far as the practicality of uploading document is concerned, we suggest that you create a separate folder for a separate customer and you save all the relevant documents of that customer in that folder so that there is no mismatch. You just open that folder and upload the documents one by one from that particular folder itself. So instead of saving it here and there, just create a separate folder in the name of that separate customer and then use that folder for uploading all the relevant documents from there itself. Okay.
Next is the payment section. Select the appropriate method of payment as shown on the screen.
Okay. Once again, a very important part. We skipped this pay now wala option just because हमको यहाँ पर वो pay करना था. So for payment option, we are offering 3 various methods. The first is pay by bank, the second is pay by check, and the third is PG. Pay by bank means that the transaction is done at the bank branch. Okay, already made at the bank branch, whether it is a BOI branch or a UBI branch. Pay by check means that the customer is offering the payment by a check of some other bank. This particular check need to be submitted at SUD office and will be presented at the relevant bank for clearing. And PG link is the third option, wherein we offer our customer a facility of online payment. He can make the payment online via internet banking or debit card or credit card. So these are the 3 options available by which the customer can make the payment. Generally, we use pay by bank because maximum transactions are being done at the bank itself. So when you click on pay by bank, so there is an option of browse. Okay. So when you browse it, you can get the various transactions that you had been done. You need to select the relevant transaction ID and it will be, data will be fetched about the payment. So maximum transactions are being done by pay by bank option, but yes, pay by check option is also available and PG link option is also available.
Submit the case once all the details are filled in. The link for ACR and the payment gateway link will be sent post customer consent. Post successful submission, system prompts that app number submitted successfully. Now, let us see the customer declaration form process.
Let's look at it.
So now we'll see how the customer will provide the online consent using OTP, right?
Now, currently there was an option to upload the physical CDF form or take customer consent through SMS. Going forward for non-month end, customer consent will be mandatorily submitted through SMS, and during the month end, the SMS facility will be disabled and customer declaration form will be uploaded in physical mode only. In App OTP, with the latest development in DQ, a provision is enabled in DQ wherein the SO can take consent on behalf of the customer through.
Okay, so before we finally submit this proposal form of the application, this will be a screen that you will see. There is an option of in-app OTP or send proposal consent. So there are two options available to get an online consent of the customer. The first is in-app OTP, wherein the customer will share the OTP to the sales officer and the sales officer will type in that OTP and the form will be submitted. The second option is send proposal consent, wherein a link will be shared with the customer. He will have to open that SMS, click on the link provided, and then he will give his consent and will receive an OTP submission. So in both ways, the submission will be online, but in the first one, OTP will be shared by the customer to the concerned sales officer. And for second option, he will have to give his consent via clicking on the link provided in the SMS.
In-app OTP, to submit the CDF now click on in-app OTP where user will be redirected to proposal service page. On accepting terms and conditions, OTP will be sent to customer's mobile number. OTP has to be entered and submitted. Once submitted, it will redirect.
This OTP is being submitted by the sales officer in DigiQuick itself. Okay. Don't get confused that this is an OTP which will be submitted by the customer. The OTP will be shared by the customer to the sales officer, and the sales officer is inputting that OTP in DigiQuick. Okay, so this OTP is in DigiQuick itself.
Has to be entered and submitted. Once submitted, it will redirect to DQ screen. Second option is send proposal consent. Proposal link will be sent to customer's mobile number. SMS with bit.ly link of proposal services will be sent to customer's mobile number. Further, there are three options available. One.
So we'll send a link to the customer with a bit.ly link, right, through SMS. So customer need to open that, click on that link and give his consent. There are three options available. If there is somehow that the SMS link is not being delivered to the customer, so there is an option of resending proposal consent link. There is an option of checking the status, whether the customer has given his consent or not. And the third option, the first one is in-app OTP. If there is some constant problem with this link, then we can revert back to the in-app OTP part. If the sales officer or the customer is facing a problem in giving his or her consent through the link, then we can revert back to the in-app OTP, wherein the customer will just receive an OTP and he will share it with our sales officer. So these are the three options available.
Resend proposal link. Provision to send the link again. 2. Check status. To check the OTP consent status. 3. In-app OTP. If SO wants to switch back to in-app OTP.
Payment through payment gateway.
So now we'll see how the payment gateway link will work. If somehow a customer opts for an online payment of the premium, how will you do?
Post-submission of the application form in DigiQuick, data entry check would be performed by the NP operation team for contract creation. On submission, the payment link would be sent to the customer on the number mentioned in the proposal form. The customer needs to click on the link in the SMS. The customer can make payment through credit card, debit card, or online payment. The details of the payment amount would auto-populate. The premium confirmed by the SO would reflect. The regular process of online payment to be followed by the customer. On submission, customer would have the option of downloading the acknowledgement.
So this is the complete process, where an SMS link will be shared with the customer. That link needs to be clicked, and that particular link will take to the payment page where all the payment details are auto-populated, right? And the customer will need to make an online payment just like a regular normal online purchase. by using debit card or the credit card or the internet banking. Once the payment is made, the customer also has an option of downloading the acknowledgement about the payment receipt.
Acknowledgement. The screen shows the SMS triggered to customer and follow-up SMS for sales.
This is the sample SMS, the kind of SMS that will be received by the customer for making the payment, right? And the second one is the SMS below is that will be sent to the salesperson for follow.
Officers. Customer is required to click on the payment link, from which the customer would be taken to payment gateway page of bill desk. Customer can select the options to pay from debit card or credit card, internet banking. Proceed by clicking on Make Payment. Post the payment, the confirmation page would be displayed as shown on screen. Click on the Download PDF button to download the acknowledgement. Post the closure of all the requirements, customer consent and payment. If the underwriting decision is okay, policy is issued. Digital Specified Person Confidential Report.
So moving ahead with the second part, this is the SP report or the ACR. So जैसा मैंने कहा था कि we have both the options available. We can physically also upload it using the ACR form signed by the concerned SP, a special person, or the SP may opt for a digital submission of his ACR report. The process is shown in the future slides.
The same process for digital specified confidential report is followed by the specified person.
The process is more or less same, just like a payment file.
The screen shows the sample SMS triggered to the specified person.
So this SMS will be received by the SP, special person, on his mobile, and he can submit his SP report by clicking on the link provided, if he is not opting for the manual one. For SP report, both the options available, physical as well as the online one. For CDF, it is only online during the month and only physical during the month end. Okay.
On clicking the link, the following form will appear. The specified person needs to click on the I agree checkbox and submit. On successful submission of SP confidential report, thank you page will be displayed as shown. The policy tracker is used to track the...
Okay, so this was about the submission of the cases. Now the second icon which we showed you on the home page, which was beside the new business icon. So this is the policy tracker for tracking the status of your case. Okay. This is on the home page. This is after you have submitted, you need to check the status. So what is the status? What is the proposal journey?
Status of the policy. These 4 tabs can be used to track the current status of your policy.
So there are 4 tabs available. At the bottom of the screen, you may be seeing proposal journey, requirement cases, issued cases, and proposal tracker. So we'll see one by one the purpose of these 4 icons provided.
It also shows you the status of all your pending cases. Pending in proposal journey, pending in requirement, policies in issued cases, proposal tracker. These 3 tabs under proposal journey tab can be used for cases.
So when you click on proposal journey wala tab, once again you see 3 options: journey pending, completed submit pending, and submitted. So journey pending means that you started inwarding a case to the DGQ, but somehow due to some reason, the journey was not completed end to end. Then you can see all those cases in the screen below, and then you can click on the case you want to submit, and you can start the journey from where you left it. So these are all cases wherein the DGQ journey had started, but not completed end to end.
Journey pending, proposal entry was started but left incomplete. Completed, submit pending, process has been completed but pending for submission, sync process pending. Submitted, submitted but not issued. This tab can be used in cases where requirements are raised post their submission.
So second one is requirement cases. So if there is some document which need to be resubmitted, there is some requirement. So you can go to this particular tab under proposal journey and you can upload this relevant document over here. Okay, there is no need to take help of the operations team. You can do it directly using this particular tab called requirement cases. This is for submitting the requirement once it is raised by the underwriting team.
This tab can be used to see the cases which has been issued. Note that the case details of cases issued 30 days or prior cannot be seen.
So for the last 1 month issuance, you can see under the tab called issued cases. So this is the part of the second icon that we were discussing, the policy tracker part.
Clicking on the policy tracker
This is the
icon,
fourth
the
one.
link will open to track the policy. Enter the application number to search the policy.
So this is the fourth icon wherein you can track your application, what is the status of the application, whether it is pending for issuance or whether it is dispatched or not. So you just need to input the application number and the process will be through. Right? You can see the status of your application using this proposal tracker.
Thank you.
Okay, so thank you guys. So this was all about the process about DigiQuick journey. Okay, so hopefully I was able to clarify some of the doubts, but this is one of the very important process and to be taken care of with utmost seriousness. Sir, Amitabh sir, over to you for the closing remarks.
Yeah, thank you so much, Vivek. I think it was a very nice session. I think people would have got full clarity over the DigiQuick process, how we can save time, how we can fully utilize the eKYC method, and with very few inputs, we'll be able to onboard the customer. I think people whosoever may have any kind of queries, any questions, a lot of would have got answered here itself. Okay. But at the same time, in case if you have any queries, either on this or on the products, please put your queries in Mobcast. We have just initiated the feedback section on the Mobcast for this product marathon journey. So you can put your feedback, as well as in case if you have some queries which you want anybody to answer, you need any clarification, you can put it over there. What we will do is we will collate all of them, and day after tomorrow, when we move to the second leg of product marathon, we will answer all these queries. In case if you have any issues of any kind, you can also get in touch with the CDM or the ZTM who's there in your territory. Lot of things which we want to know, a lot of times we hesitate. My request would be, and I would encourage each one of you to please raise your queries to the CDM and the ZTM, ask questions, get it clarified and be better positioned to answer the customers. Don't forget that it is the knowledge and skills and the attitude to learn which will give you the desired success in your journey. If we have to move ahead, we have to move at the fast pace, then all these skills and knowledge are required by all of us. Second thing which I would like to request and urge each one of you who's managing your territory is that please ask your specified persons in the bank to download Mobcast. Mobcast has a lot of material in it which is required for them also to know, and they will find it very interesting, because the kind of modules which we have in terms of comics, in terms of various videos which we have uploaded are going to be not only informative, but are very catchy in any case. So I would urge each one of you to please popularize Mobcast amongst the SPs of the bank. Let us ensure that each SP downloads the Mobcast on his mobile. In case if you face any errors, any issues which you have, please get in touch with the CDM and the CDM will get it resolved. Don't worry if in case if there is an error and you are trying to think whom should you go to, please approach the CDM or the ZTM. He will get it resolved. It will come to us and we will ensure that none of the queries get left out. Now, while I was saying that, the feedback section, which is required, I will show you a slide, 1 second, which has the path for it. Just give me a second. Give me a second. I'll just show you the path which you can utilize to give your feedback. I hope my screen is visible.
Yes, sir.
Okay. So please put your feedback in this section and put your queries as well. Right? Just give me a minute, please. There was a technical glitch and you've seen the path for sharing your feedback. Let's meet again on Friday, same time, evening 4 to 6, to experience the second session of the product marathon, and let us make full use of it. Thank you so much, everyone. Good night and take very good care of yourselves. Thank you very much, everyone.